Nilesh Kambli, the CFO at Star Health, joins in on the show right now. Nilesh, hi, good morning. Good to have you today on ET Now. You've certain funds, Nilesh, which have exited, but you saw healthy buying as well kicking in. Can you highlight for our viewers which are the funds which have fully exited the company?
Good morning. Thank you for having me. To give a background, we were always a professionally managed and private equity-driven company. Some of these funds have come in 2016-17, and they are towards the end of their fund life. Fully exited funds are very less. People have been slightly reducing their stakes. So Madison, APIS, ROC, universities which we have on our portfolio, they have exited a part of their holdings.
Okay. None have been complete exits so far?
Yeah, I mean, very few stakes are remaining now, but yeah, they are still the shareholders.
Do you anticipate more such exits going forward?
Because it's private equity, there will be some supply which will be there, but we are not bothered. As a management, we are more focused on the business performance. The business has been good, and we continue to do that.
Nilesh, hi, morning. Now, you've hiked prices on your family Ultima. It's been about 3 months. What has been the response? Have you seen strong retention?
Yeah, absolutely. So we had predicted more than 100% retention on the premium side, and on the volume side, we were expecting some 3 to 4% fall-offs. So it is in line with the expectation. In fact, it is better than what we had expected. So that's going on very well.
That's good to know. So in light of that, what is the outlook on your FY24 growth guidance, talking about the volume impact, the price impact? What is it that you're aiming for, and is Q2 as of now on course?
Yes, absolutely. So we have been estimating that we'll go 20% and above in the short term as well as long term, 3 to 5 years. We are well on course to achieve the growth targets. And it's an all-round growth. Our agency vertical, which is our mainstay, we have been recruiting agents. It's going on really well. Digital and banca businesses are doing really well for us. Banca is 50% plus growth. We have 39 partners, both on the PSU banks, private banks, NBFCs. We are firing on all the cylinders. We have been investing in this business for quite some time. So yeah, all-round, well-diversified growth across the channels for us.
All right, good to know. Now, I have to ask, because there's been plenty of chatter around how medical inflation is going to work its way in through the system in India. Some say that costs could even double over the next 5 years. Is that a sense that you're getting from what you've heard, and what are estimates really pointing at? What would be the impact thereby on your company?
Yeah, so there is medical inflation more so in the urban cities amongst the listed hospitals. We as a Star Health is a pan-India presence company. We have 35 to 40% in semi-urban rural areas where the impact of inflation is not very high. What we are doing is we are trying to bring in efficiencies in our claims processes. We are negotiating with the hospitals for package rates. We are giving preference to the hospitals who are following medical protocols. They are charging the customers well. We are analyzing data to ensure that the readmission of customers is reduced, which helps in the customers as well as Star Health as a company. Lot of focus on data analytics. We are trying to manage frauds in a better way. That is giving it a lot of efficiency. So while there is inflation in the hospital bills, there are ways and means to ensure that, the customer is not impacted to the price increase. And we believe that there are a lot of claim efficiencies which will come in, which will ensure that, we are able to efficiently manage this whole inflation. To give one example of data analytics, what we have done is through product analytics, we have found out what are the high impact areas during epidemics. What we are trying to do is, we are promoting vaccination in these areas so the customer does not have to get hospitalized, which will be very effective for the customers. So a lot of areas where the work is going on, and we'll ensure that, the inflation is not passed on to customers to the price increase.
So you don't think that's going to impact your claim ratios? Is that what you're saying?
No, so it will impact, but through the efficiencies that we are bringing in, the price increase we have taken, that should give us higher earned premium over a period of time. So we don't believe it should impact our claims ratio in the near term.
Tell me, as a trend, what is it that you see? You've highlighted the current price trends, but I don't think medical inflation is going to go away anytime soon, right? In fact, it's an ongoing upward curve, if I can call it that. So do you sense that more such price hikes could be in the offing, given the trend would be on the uptick? Or you can correct me if I'm wrong here.
See, that is what I'm trying to say. So, though there is inflation, it is more so in the urban cities. When it comes to semi-urban rural areas, the impact is very less. And there are efficiencies which are still to come. The fraud control and management. It's a retail business. Any reports you see 8 to 10% is the impact of fraud. What we're able to identify is around 2.5%. There is enough and more work to be done. There are profitable products that we're trying to launch. Banca is a benefit product. So again, that should help us to reduce our inflation.
The other thing that I wanted to also talk about is that, what we gather from your commentary, or rather other competitors as well, is that 2/3 of the players in the industry are operating at a higher EOM than the guidelines. Do you see such a trend? And then what's the likely impact of this?
Yeah, that's a very good point. The regulator has brought in expense of management guidelines. We as Star Health are operating at 31%, which is well below the requirement of 35%. The objective of the regulator is very good. He wants that the policy holder should be benefited while the industry is, able to penetrate the market. So there are players who are operating more than 35%. What we believe is the regulator will give a glide path and ensure that these players start operating below 35% and continue to reduce expense of management. So that should be a good for the industry, in terms of reducing the overall cost of acquisition for the business.
And how do you plan to double the group business by FY24? What are going to be some of the levers, and are you on track?
See, when we talk about group business, there are two segments to it. One is the employer-employee, and we want to focus on the SME business, which is profitable, where the combined ratio is in the range of 93 to 95%. The other part of the group business is the banca business, where it's sold to the customers of the relationship PSU private banks. That again is doing very well for us. So taking both these things together, we want to double our group business, which will be profitable as well.
And on IFRS, you have to present your view by September of this year. What would be the likely impact? What's your view on what you think needs to be done?
Yeah. So what the regulator is trying to implement is IFRS and risk-based solvency. IFRS is basically a global standard which will align Indian accounting standards to the global standards. As a Star Health, as a health insurance company, we see that this will be extremely beneficial to us. Today, what it does is, the business is done on a yearly basis. So the earnings come over the 12 months period, but the cost of that business is recognized upfront. So there is always a drag for a growth-oriented company. What IFRS will do is it will defer the cost also over the earning period. So we have done some initial estimates, and we believe that our ROE, which is anywhere between 16 to 18%, it should rise by 2 to 3%. It should touch that 20% plus levels. And that's a direct benefit which we see due to implementation of IFRS. Along with IFRS, the regulator is talking about risk-based solvency. They have issued a technical guidance note on that. Again, for health insurance players, the weightages when it comes to RBC are very less. That again should release a lot of capital for the company. So both these things are extremely positive.
All right. Thanks so much for taking time out and joining in. That's the view. 20% growth is being aimed for in the near term. All-round growth and medical inflation, yes, is being seen in listed hospitals, but the price hike could perhaps mitigate the impact. That's Star Health quoting at about 615.